One number lands this Wednesday morning at 8:30 Eastern, and it decides whether the strangest rally of the year keeps going. Stocks just hit record highs because the economy lost jobs. Gold is at $4,300. Both of those trades are waiting on the same report. Here is what is actually being decided. Rewind to Friday. The July jobs report showed the economy losing 23,000 jobs. Economists expected a gain of 80,000. That is a miss of more than 100,000 jobs, and the market went up. The S&P 500 closed at a record 7,757. The Nasdaq jumped 1.3%. Why? Because bad news for workers killed the case for another rate hike. Markets stopped fearing the Fed. Now the other half of the Fed's mandate reports in. July inflation, the CPI, prints Wednesday. A cool number locks in a September pause. A hot number puts a rate hike back on the table in a shrinking job market. That corner has a name, and nobody at the Fed wants to say it. Here's the shape of it. First, the setup. The market is currently pricing a little over half odds that the Fed pauses in September. That entire position was built on one labor print, one report. The 10-year Treasury yield eased to about 4.66%. The VIX, the market's fear gauge, sits under 15. That is a calm, confident tape leaning on a single data point. Wednesday either confirms the bet or breaks it. Second, look at what gold is telling you because it does not match the stock story. Gold rose over 2% Friday to about $4,340, near record territory. Understand how strange that is. Record stocks say risk on. Record gold says protection. When both rise together, investors are not betting on growth. They are betting against the referee. They are buying stocks for the rate relief and gold in case the relief is a mistake. Third, the part almost nobody covered. On August 4th, the Treasury Borrowing Advisory Committee, the panel of Wall Street insiders who advise the government on its own debt, published its report. Their words, Treasury remains adequately funded through fiscal 26. Then, the warning, widening funding gaps starting in fiscal 27, accelerating into 28, with bigger bond auctions likely. Sit with that. The same institution deciding whether your mortgage rate falls is managing the borrowing costs of the biggest debtor on earth, the government itself. Lower rates do not just help you, they save Washington hundreds of billions in interest. Who decides and who never has to live with the consequences? That is the question underneath every Fed meeting. Quick calendar note for the week. Producer prices follow later in the week, and a parade of Fed speakers will react to Wednesday's number in real time. One print, then a week of official interpretation. The interpretation often moves markets more than the number. And in the background, the Strait of Hormuz. Iran said Saturday a deal with Oman is close, but, their words, it will not open the waterway by itself. Tehran wants concessions from Washington first. Oil sits near $78 on West Texas, $83 on Brent. A signed deal that does not move a single tanker is exactly the kind of headline that fools an algorithm and burns a trader. If a deal is announced this week, the question is not whether it signs, it is whether ships actually move, and on whose terms. Watch the tankers, not the signatures. So what does Wednesday mean for your money? Nothing here is financial advice. It is a map of the forces. If CPI comes in cool, the pause holds, borrowing costs likely drift down, and the gold and stock rally both get fuel. If it comes in hot, the market has to price a Fed tightening into a job market that is already losing positions, and that repricing would be fast and ugly. The asymmetry is the point. The market is positioned for the good outcome and hedged with gold for the bad one. You do not need to predict the number. You need to know that one release at 8:30 on Wednesday morning is carrying more weight than any single data point should. That is not a healthy market. That is a market leaning on a referee who is also a player. So here is the question. When good news and bad news both push stocks higher, what information is the price actually giving you? Tell me what you think in the comments, and I mean that. Blue pill. The Fed has the data, the landing is soft, and records are records. Red pill. Stocks and gold rising together means the smart money is hedging the referee itself. One print from the exit. Both are honest reads. Pick yours. Wednesday, 8:30 in the morning, Eastern. Set the alarm. The timeline keeps moving. We will see you in the next one.